Hello, this is my presentation on analyzing financial markets. So, what is a financial market? This is a quote from Adam Hayes from the Investopedia website. He says that financial markets are any marketplace where securities trading occurs. So what is a security? This is the buying and selling of financial instruments like stocks and bonds. And then he says that whenever the financial markets fail, this can cause economic disruption and then recession and rising unemployment. So financial instruments, this is the stocks, bonds, derivatives. So stocks are a type of investment. So this is buying a small piece of that company. And then as the value of that company goes up, so does your stock. This is a little bit riskier because your money is dependent on whether or not that company is making profit. And so an example of this is investing in a company that's doing really well, and it'll also be increasing your stock and you'll be making more profit. And then a firm's first stock sale to the public is called an initial public offering, also called IPO. And then we have bonds, which is a small loan to a business or the government, and then you get paid back with interest later. So this is considered safer because you are guaranteed your money back. And then there's different types of bonds, like corporate bond, which is issued by firms, and then the bonds are also issued by various levels of government. And then a municipal bond, I don't know if I'm saying that right, municipal. It's issued by cities, and then it's a state bond by the U.S. states. And then a treasury bond is by the federal government through the U.S. Department of the Treasury. So then we have the derivatives, and this is a financial contract between a buyer and a seller. So the value is determined by the value of the asset, which can change. And then they're basically sharing a portion of the profits. And then we have the dividend, which like the firm is making direct payments to its shareholders, and this is a way for the company to share its profits with investors regularly, or even monthly or annually. And then we have market participants and their roles. So we have individual investors. These are they invest personal funds into financial markets, and then they work to bring attention to undervalued or smaller companies, and then they try to shed light on potential investment opportunities in the future or even now. And then this can range from first-time investors to seasoned investors who have had a significant role in shaping a market trend. And then institutional investors, these are larger organizations. They invest on behalf of their clients, and then they have substantial assets under management, and then they invest in various securities. So these may have access to things that the individual investors did not have access to. They make a significant impact on the prices and the market trends, and then these entities pool funds from multiple investors, and then they invest in various securities. And then we have the financial intermediaries. They provide a middle ground between two parties financially in a transaction. So if you think of a bank, they serve as a mediator between a lender and a borrower. So that is a little example of how you can think of them. And then we have the stock markets or equity markets. So these are one of the most well-known markets. These are shares that are bought and sold by traders and investors, and then they provide a way for money to flow in the economy. These are used by companies to raise capital, and then by investors to search for returns. They create growth, obtain funds and financial resources from investors to support their business and operations. And then typical participants in a stock market would be like investors, traders, specialists in maintaining liquidity, which is assets that can be easily converted into cash, and then brokers, which are third-party specialists. These are not directly like actually in a position in the stock, but they facilitate the trades between like the buyers and the sellers. And then we have bond markets, which is also the debt, credit, or fixed income markets. This is basically a contract, like an agreement between the borrower that the borrower will pay back the lender or investor at some point, And then, so the bond markets, they finance and invest into projects and operations. And then a bond holder is anyone who owns a bond and then receives the interest payment in return. So the difference between this and a shareholder is a shareholder legally owns a stock in that company. So they basically own a piece of that company, and a bondholder is basically just a firm's creditor. So they're lending the money expecting to get it back. Okay, so a derivative market, so these are investors, so investors trade derivative instruments whose value is determined by underlying assets. So there's two primary parts of this market, which is exchange traded derivatives and over-the-counter OTC derivatives. So the exchange trade derivatives, these are standardized contracts. So they are set in place and they are traded on organized exchanges. So these can relate to the futures and options contracts. And then the over-the-counter or OTC derivatives is a customized contract between two different parties, and this does not involve exchanging. And then this would relate to like the forwards and swaps of the derivative markets. And then we have the functions of the derivative market. These are important. This is the price discovery, risk management, operational advantages, and capital efficiency. The price discovery helps with providing valuable insight into the market trends. And then the risk management is reducing risk, and then investors will safeguard themselves from potential harm or losses. And then the operational advantages, the investors will gain exposure to asset classes without direct ownership. And then we have the capital efficiency, which is this attracts diverse range of retail traders and investors, and then this lowers capital initially, like their initial capital is lowered. So it attracts a lot of like traders. Okay, and then these are my resources. Thank you for watching.